Hi guys, so this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. While we have quite a lot to cover today, ranging from Chainlink almost dropping 20% in just a few days, to Jamie Dimon, CEO of JP Morgan and Chase, endorsing stablecoins, to the White House publicly acknowledging Chainlink's critical role in cryptocurrency infrastructure. On top of that, we also have Michael Saylor from MicroStrategy endorsing a Ponzi synthetic version of a stablecoin. And on top of all that, I have to get up in 4 hours. So let's do it. Anyway, Jamie Dimon, the longtime CEO of JP Morgan and Chase, is finally showing signs of softening his infamous anti-crypto stance, at least when it comes to blockchain and stablecoins. For years, Dimon was one of cryptocurrency's harshest critics, famously calling Bitcoin a fraud in 2017 and doubling down on that sentiment by labeling Bitcoin as a pet rock as recently as of 2023. But despite his continued skepticism towards the decentralized cryptocurrencies, Dimon has now publicly acknowledged that blockchain technology has real utility, especially when applied to regulated financial systems. He specifically pointed to tokenized dollars and stablecoins as logical innovations, stating that they make perfect sense in a well-regulated environment. This marks a significant shift from his previous blanket condemnation of cryptocurrencies and signals a growing recognition of the technology's potential to reshape traditional finance. Now, JP Morgan isn't just talking, it's already building. The bank's blockchain platform, Onyx, and its proprietary stablecoin, JP Morgan Coin, have moved billions of dollars in institutional payments, offering faster settlement times and reduced reliance on legacy financial infrastructure. They are also experimenting with tokenized money market funds and treasuries, aiming to streamline liquidity and operational efficiency for institutional clients. This move puts JP Morgan and Chase at the forefront of Wall Street's entry into real-world asset RWA and tokenized finance space. Whilst Dimon still refuses to back Bitcoin, his pivot towards permissioned blockchain and stablecoins is a clear sign that the crypto rails are becoming too effective to ignore. Bottom line, one of cryptocurrency's loudest critics is now quietly building on chain because even the biggest banks know where the future is headed. Speaking about the future, Chainlink has been acknowledged by the White House as a key player in cryptocurrency infrastructure. The Office of Science and Technology Policy named Chainlink a key player in the development of cryptocurrency infrastructure. The report highlights Chainlink's decentralized Oracle network as essential for connecting blockchains to real-world data, enabling smart contracts, decentralized finance, and tokenized assets to function securely and efficiently. This government-level acknowledgement adds serious legitimacy to Chainlink's role in the future of digital finance, especially as it already partners with giants like Swift and the DTCC. With regulatory clarity and institutional adoption on the rise, Chainlink is being positioned not just as a useful tool, but as foundational infrastructure for the next evolution of the global financial system. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink, and the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. With Chainlink dropping almost 20% this week, Chainlink's risk level has dropped from 0.04 to 0.02, which means that buying Chainlink today is still considered low risk, not financial advice. So let's take things one step further by adding the regression lines. So regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red regression line, indicating that Chainlink is overvalued, and the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating that Chainlink is undervalued. Now, if we combine both risk and regression analysis, we can see that right now, let me just zoom in. We can see that Chainlink is printing a pink risk level right near the green bottom regression line, indicating that Chainlink is undervalued and that buying Chainlink right now is considered low risk. Once again, not financial advice. Furthermore, there have been two other times in history where Chainlink has traded at or below the green bottom regression line and printed a pink risk level. Let me just refresh the page really quickly. The first time was back in December of 2018 when the price of Chainlink was trading at 20 cents. And the second time was June of 2022 when the price of Chainlink was at $5.89. We can also see that each time that Chainlink traded below the green bottom regression line and printed a pink risk level, Chainlink basically got a free ride to the red peak regression line. Just a quick disclaimer, mathematical models are based off of historical price action, and we all know that history cannot solely be used to predict future price action. Now, you may be wondering what I have been doing with my Chainlink position. So I haven't bought any Chainlink since Trump's fetish for tariffs back in April of this year. My Chainlink bags have been filled going on 2 years now, so I'm just waiting for my bags to pump, or perhaps I'm waiting to get wrecked. We will know soon enough. In other news, Michael Saylor, infamous Bitcoin bull, is endorsing Sarcos Technology and Robotics Corporation, STRC, in its mission to follow in the footsteps of MicroStrategy by positioning itself as a Bitcoin dividend stock ahead of its initial public offering, or IPO. STRC plans to distribute Bitcoin dividends to shareholders, hoping to tap into the growing investor appetite for digital asset exposure without directly buying crypto. Whilst Michael Saylor isn't affiliated with the company, his playbook, leveraging Bitcoin as a treasury strategy and investor magnet, is clearly influencing STRC's approach. By combining its robotic and automation business with Bitcoin-based shareholder rewards, STRC is betting that this hybrid model can make its stock stand out in a crowded IPO market and appeal to both tech and crypto investors. Not financial advice, but I wouldn't touch this crap with my enemy's money. Ladies and gentlemen, if you want to invest in Bitcoin, just go ahead and buy Bitcoin, not these weird, funky Bitcoin proxies that are solely designed to extract you from their hard-earned money and give your money to people who are already 1 million times richer than you. Okay, so let's move over to TradingView, and today we are going to take things back old school. No Wyckoff analysis, no Elliott wave analysis, just Fibonacci analysis with indicators. So in previous videos, I talked about the $19.46 resistance level, which is the white 1-to-1 trend-based Fib extension. Price did end up getting rejected, a bit harsher than I thought, to be honest, because Chainlink is down almost 20% over the past few days. In the last video, I did draw one more white 1-to-1 trend-based Fib extension at $16.56, which is exactly where Chainlink is trading at right now. So let's see if support will hold. Right under the white 1-to-1 trend-based Fib extension, we do have the red 200 daily moving average, which acted as resistance back in May, resistance back in March, support back in February of this year, and support back in November of 2024. Remember, moving averages often serve as liquidity points for a potential reversal. So given how Chainlink is at Fibonacci support and close to moving average support, I am in favor of a bullish bounce happening quite soon. Now, if Chainlink continues to drop lower, the next Fibonacci support level is at the white 1.618 trend-based pivot extension at $14.94. Now, if we turn on market cipher B, just a quick introduction to this indicator. The yellow wave is the VWAP. The blue waves are the momentum waves, and the red waves and green waves are the money flow waves. As you can see on screen, we can see both the money flow waves and momentum waves on Chainlink are forming higher lows and higher highs, which is bullish. We can see in previous examples, like in November of 2024 and October of 2023, where momentum and money flow are both shifting to the upside, and it eventually caused the price of Chainlink to also go parabolic to the upside as well. So the fact that we are seeing both momentum and money flow, both printing higher lows and higher highs, it does give me confidence in saying that the price of Chainlink over the next few weeks and months will see much higher price appreciation. All right, so let's remove my drawings and let's close this video off with trend-based time fib extensions. Okay, so I do remember on July 7th of this year, I mentioned that the next time that Chainlink crosses a trend-based time fib extension is August 4th of 2025. Today is August 1st, though we are only a few days away now. Remember, every time that Chainlink has crossed a 0.618 trend-based time fib extension or any derivative of a 0.618 trend-based time fib extension, the price of Chainlink has experienced a lot of volatility. Going back to August of 2020, when Chainlink crossed the 0.618 trend-based time fib extension, Chainlink ended up crashing 62%. Back in May of 2021, when the price of Chainlink crossed the 1.618 trend-based time fib extension, the price of Chainlink crashed 74%. Back in January of 2022, when the price of Chainlink crossed the 2.618 trend-based time fib extension, the price of Chainlink crashed 75%. Price didn't really move much when Chainlink crossed the 3.618 trend-based time fib extension. And obviously, when the price of Chainlink crossed the 4.618 trend-based time fib extension, Chainlink went nuclear by pumping over 300%. In March of 2024, when Chainlink crossed the 5.618 trend-based time fib extension, Chainlink ended up crashing over 60%. And in November of 2024, when Chainlink crossed the 6.618 trend-based time fib extension, the price of Chainlink pumped about 100%. So this upcoming Sunday, which is August 3rd, will be the moment we have all been waiting for. Either Chainlink is going parabolic to Pluto, or Chainlink is going to crash and burn into the abyss. Time will tell. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.